Today on this special edition of India Revival Mission, let's welcome on board Mohan Goenka, the director at Emami Limited, joining in the show right now. Mr. Goenka, morning. Good to have you on the show and welcome to India Revival Mission. Hope all things well.
Yeah, everything is good as of now.
Okay, great. You know, things seem to be looking good with you, given how strong your second quarter volume growth has been. Help us understand how has the recovery been in the third quarter and whether you're anywhere close to pre-COVID levels or not.
So, I think we are very happy with our quarter two numbers, and after a long time, we have seen a double-digit volume growth. And interestingly, this growth was led by a lot of brands. It was not led by just one or two brands, which was very, very fascinating. And even more interesting is the numbers that we are seeing in the third quarter. The winter has set in very well for us and North and the Central India, because the third quarter consists of a large winter portfolio. So we are very optimistic of seeing a double-digit growth in the third quarter as well. Thing looks to be bright, and as I said again, even in the third quarter, this growth is led by a number of brands, not just by the winter portfolio. So yes, we are at beyond our pre-COVID levels. So, and also because Emami has a large rural base, rural is really, flourishing. I would say rural is growing for us. So, from all sides, I'm happy.
Okay, good to hear that. I'm going to talk about each and individual brands and product portfolios in a bit. But since you talked about the winter product portfolio, help us understand where is that in terms of scalability as opposed to the pre-COVID levels same time last year?
So winter portfolio largely consists of BoroPlus brand and of course the Chyawanprash portfolio. So both the portfolios are at double digit. As I said, winter has set in much earlier this time across India. So, and because it's a rural, more rural-led brand, so it is the volume growths are at double-digit levels for now. We have to see how long this winter continues because it has just set in. If it continues like this, then of course we would grow much better than our last year numbers, both on Chyawanprash and on BoroPlus range.
Sure. Help us understand some numbers here when you talk about Chyawanprash, because in the post-COVID world, one has seen an increased reliance and dependence towards health and hygiene. I bet the sales of Chyawanprash must have zoomed.
Yes, though Chyawanprash is relatively small in our total portfolio, it is around 50 crores of our sales come from Chyawanprash. But yes, we have in the last quarter also we grew at almost 2x plus. In this quarter also we are seeing at about 30 to 40% of growth in Chyawanprash. But it is relatively small compared to our other portfolios. But what is interesting is to see the numbers of BoroPlus. As I said, BoroPlus has really fired in the last 1.5 months. If the winter continues to be the same, then we will outnumber our own budgets for BoroPlus.
Since the recovery really has been all about the rural end of the economy, and I'm not just talking about your product portfolios, but across segments, even when it comes to auto, cement numbers, just about everything is showing a faster rural growth as opposed to urban areas. Considering 55% of your total revenue pie does come from the rural segment, help us understand what is the rural consumer gravitating towards when it comes to your product portfolio pile?
So we have always been a rural play, and because of the reverse migration, we are seeing more traction coming from rural. And what is also interesting to note in the recent past is consumers have upgraded from local brands to branded goods, both in urban and rural. because Emami has a large rural play, so we are seeing more traction in rural. And as I said, what is very interesting for me is not just it is led by Boro Plus, it is led by Boro Plus, it is led by Kesh King, it is led by, Navratna or every other portfolio that we have. So, which is very, very interesting. We have not seen this in the past. Of course, we have to see how long this trend continues, but as of now, there is a strong traction.
Great. So suffice to say that all the innovation and new product categories would now be more rural dominated, as has always been the case with you?
No, I wouldn't say that it would be rural dominated. We are a mass market company, so we look at consumers across the straddle. Of course, our contribution comes more from the rural. But yes, the new offering, the new products that we have launched, it is across in health, in immunity, in hygiene. So because of this pandemic, we have seen a great opportunity in Zandu, in Boro Plus range, and the new range that we have launched under home and hygiene is Emasol. So it would cut ice across urban and rural, I would say.
At present, Mr. Goenka, the prices of raw materials are benign. What is your outlook on RM pricing and margins for the coming quarters? Because the raw material costs would have a huge bearing on the kind of growth projections that you have.
So we have seen benign raw material prices for quite some time now, and it still continues. So our margins are at all-time high. Last quarter, we had almost done plus 30%. This quarter also, it looks to be above 30%. Our average margin, EBITDA margins have been in the range of 26 to 27%. So we are happy with our margin profile, and if the raw material prices remain to be like this, then we are very confident of doing an ever highest margins. Menthol also one of our key raw material is menthol, which is also benign for quite some time now.
You saw highest ever quarterly sales, Mr. Goenka, for Kesh King in the second quarter. Has that trend continued in the third quarter as well?
Yes, absolutely. Kesh King is firing across urban and rural. So we have seen some consumers moving from other brands to Kesh King. In the recent past, as I said, also consumers' preference have moved from local to branded goods, which we are seeing across our product range. So, in which Kesh King has also benefited, I would say. In the third quarter, also Kesh King numbers are a double-digit growth. Yes, for now.
Mr. Goenka, reports also suggest that FMCG sales seems to be back to pre-COVID levels when it comes to your advertising spends. Is that the same for the company as well? Can you just walk us through, what the outlook is when it comes to your ad, your promotional, your marketing spends?
So yes, for now we have become very aggressive. As I said, we have launched multiple products in the last few months, so which would be backed by very strong advertising. What looks like that our advertising should be in the range of about 17 to 18%, what was at the pre-COVID levels. With new launches, because we have only become aggressive in the last few months as far as new launches are concerned, which would take away substantial amount of advertising.
Okay, fair enough. And in terms of your innovation, your new product launches, which are some of the categories that the company is planning to focus on? And what is it that you're looking at by way of contribution from your new products to the overall revenue mix?
So we have launched multiple products under our brand Boro Plus, which is to do with, health and hygiene. Also, home care, we have launched a new brand, Emasol. We have launched multiple products under Jhandu because health, immunity, these have become buzzwords, keywords. Consumers' preferences are really, changing towards home care remedies, or towards Indian Ayurvedic preparations. So these are some of the products that we have come up with. And sorry, what was your last question?
No, just wanted to understand as to where the new innovations in products would be, Mr. Goenka.
Launches that we have done, we expect roughly about 4% of revenue coming from the new products. And we have seen that in the last quarter, this quarter also, it looks like it should be in the range of about 3 to 4%. The consumers have accepted, I would say, with all the new launches that we have done in the past, it has been welcomed by the trade. Some of the products are showing good traction with the consumers also. So, of course, we would have to wait and watch because these are all new products. We have to be consistent with our marketing strategy. As I said, preferences are moving towards Indian brands. Preferences are moving towards branded goods. So I think there is a good room for us to grow in these times.
Sure. As an observer for the many years that you have been at the helm at Emami, what has been your experience on how the consumer behavior and patterns are changing, Mr. Goenka, in the post-COVID world?
There is a very clear trend. Of course, this has been very unique. Of course, there were trends where we were seeing, that premium products were gaining traction. E-commerce was on the rise, and but during these times, we have seen a clear shift towards health, immunity, and hygiene. So everything has, now limited to health, immunity, and hygiene. And as I said, Emami has a good room to play because we have multiple brands which can, where we can launch products under BoroPlus or under Zandu. Even an international brand which we acquired 2 years back in Germany, Creme 21. We have launched so many products under Creme 21 and we have seen the benefit. So every household today, every research that we do, they are doing something or the other as far as home care remedies are concerned. So these are trends. I think this should continue because people have understood the benefit of, home care. People have understood the benefit of Ayurveda, whether it is haldi, whether it is aloe vera, whether anything you talk of today. So I think Zandu Healthcare can really take off. And we have also launched many products under Zandu.
Okay. Mr. Goenka, I just want to understand, I know you spoke about rural driving growth. What is the sense that it has been over the past few months in terms of the overall supply chain, the labor migration issues? Have those now completely been ironed out, talking about urban as well as for rural? And what does the situation stand at presently?
So there are no more challenges as far as supply chain is concerned. Now, of course, there are periodic lockdowns in some cities, some towns, but I think by and large, we have understood how to manage those situations. If we know there are lockdowns, then we, of course, supply to our distributors much in advance. We stock our distributors. So we have learned to manage these situations now. There are no more disruptions, I would say.
And how has the festive season, the Diwali festive season been for the company? And, what kind of a spurt in demand have you seen during this month?
So we really don't, Diwali doesn't really matter so much for us because it's the entire winter that matters. As I said, winter has set in so well in the north and also in the central, in the east. And BoroPlus has grown significantly well only because of the setting of winter. So that is what it is. I think the trend should continue. Every data that we have seen, it suggests that the winter should be there for till January or February. It should benefit Emami by and large.
I just wanted to understand in the September quarter as well, there has been that uptick in discretionary consumer spends. Just walk us through, a sense in terms of the kind of numbers that we've seen for Emami in particular and what the outlook is into these spends going forward.
So as I mentioned, see in the second quarter, after a long time, we grew double-digit volume growth. It was almost, I think, 11-12%. This quarter, we are looking at a similar numbers or even better if the trend continues in December. So advertising is again would be at 17-18%. Our margin should be at all-time high despite of high advertising spends. Some of the new launches, we are seeing good traction. So by and large, even international portfolio is doing good after a long time. So overall, I would say numbers look seems to be interesting for the third quarter as of now. And as I said, brands like Kesh King has fired in the second quarter. We are seeing similar trends in the third quarter. Fair and Handsome, which is completely discretionary, we degrew quite substantially over the last few quarters. In the last quarter, the degrowth was, I think, about 25-26%. And this quarter, I think there should be a very low single-digit degrowth in Fair and Handsome. We can even grow in Fair and Handsome. So there is a visible trend that discretionary spends also, are coming up. At least for Emami, we are seeing, across the board, there is growth momentum.
Mr. Goenka, what one has seen in the post-COVID world is the dependability and dependence on digital platforms. And across categories, consumers are migrating towards digital purchases as opposed to physical purchases. How is it that you at Emami are looking to rethink or restructure your omni as well as digital presence?
Well, this is very interesting. We see a huge scope in e-com. Presently, our e-com business is only 2% compared to some of our peers who are at almost 4 to 5% or some are at 6%. So we have identified this as a huge growth opportunity. We have grown 2.5 times in the last quarter, 2.5x in last quarter. We expect to be at 4 to 5% of our total sales in the next 4 quarters, for which, of course, we are building up teams. We are launching specific SKUs for e-com, promotions for e-com, and some specific products only for e-com. So it's a very interesting channel. It is going to stay. It is going to grow. And we understand the importance of it. So this should be a growth driver for Emami.
Mr. Goenka, could you just give us a sort of a long-term roadmap outlook for the FMCG sector as well, given all of the challenges that it's been through, the fact that we have seen health and hygiene emerge as a very strong product category? What's the road ahead for the sector? Are there any hopes in terms of perhaps government action, or which are going to be the particular segments that will be leading growth for the sector going forward?
Of course, there is a huge opportunity. See, still, as far as Emami is concerned, the penetration levels for most of our brands at single digit or, at 12-15%. So there is huge opportunity for Emami products. Of course, now we have huge baskets. Almost, we have got 7 brands which are plus 100 crores portfolio. We have 3 brands which are almost 500 crore plus portfolio. So to grow these brands, it becomes even more interesting and challenging. And the more you penetrate, the more faster we grow. So I think the outlook is fairly very robust. As I said, preferences toward branded goods are increasing as GDP grows, per capita income grows. We would always see consumers moving to branded goods. Still, there is a huge rural play. We are expanding on our distribution network in villages, in small towns, everywhere. The more we penetrate, the more growth we see. So I think if we look at a slightly longer term view, there is a huge opportunity as far as we are concerned and the overall industry is concerned.
Right, Mr. Goenka, I understand that the company is also committed to reducing debt to zero from the current 40%. What is the strategy in place for that? What is the timeline that you're looking at?
So we are absolutely committed. You have seen even in the most difficult times, we brought down our pledge from 90% to 40% now. In every analyst call, we have committed that promoters will bring down their debt to zero. And we have enough assets. We are trying to monetize some of our land banks, some of our other assets. We are in no hurry to really liquidate them at a distressed value. So we are in talks with some of the interested parties, but at the right valuations. But yes, as far as the family is concerned, we have demonstrated and we are very, very sure we would bring our pledge to zero. I can't really commit timelines. Earlier we had planned for March, but with the things, the way things look like, every industry is growing. We can get much better valuations for some of our assets, particularly in the real estate or our healthcare side. So we would dilute at the right time.
Goenka, it's been a pleasure chatting with you. Thank you so much for taking time out and joining in and giving us a perspective as to how business is shaping up for the company and the outlook on the FMCG sector.